Bitcoin is now hovering around that $28,000 mark after briefly spiking above $30,000. That came on false reports that BlackRock's ETF had been approved by the SEC. But our next guest says this could provide a glimpse of an initial reaction should this one day become true. Devin Ryan, Citizens JMP Securities Director of Financial Technology Research, joins us now. Devin, that points to a really bullish case for crypto. How are you looking at the moves on what was a false report, but the excitement that could come with an official approval?
Hey, good morning, Akiko. I think that what we saw yesterday was kind of a little glimmer into a reaction that you might see, and probably over time the reaction would be much more significant, which I can talk about. Essentially what's happening here is the SEC lost its court case against Grayscale. They had until the end of Friday to appeal it. They didn't. And so I think the probability of a spot ETF approval has gone up pretty tremendously. And so, I think yesterday what was clearly, false news, but the reality is that the probability is quite high. And if there is an approval, which again, we think will likely happen over time, you're going to see potentially tens or hundreds of billions of dollars of capital come in over the long term. If you look at just the sponsors of these ETFs right now, it adds up to nearly $20 trillion of client assets that they are managing. And so therefore, just a small allocation could really move the needle.
So Devin, a lot of us have been watching this space, and from what we understand, if they were to approve a spot ETF, it should be perhaps a group of them that all get through at once versus sort of one, or it being piecemeal. Is that still the expectation here?
Well, I think, yes, the expectation is that one gets through, then it's kind of essentially check the boxes to be able to be approved. And so therefore, others will be approved, or others could make changes to essentially be approved. And so the expectation is that what is now kind of in the queue would get approved once the first one does. And so that's kind of this dynamic of unlocking significant capital that really has just not been participating in the space yet. If you think about the wealth management industry, where ETFs are really a tool that are utilized, I think people are much more comfortable with an ETF structure than potentially going out and buying digital assets individually. And so there's bigger implications than that, but that's essentially it at a high level.
What are the other key levers that you're looking at that could push Bitcoin, maybe not back to the record that we saw in 2021, but closer in that direction?
Yeah, it's hard to kind of speak exactly to price. Other people will do that. But what I can say is that adoption does tend to correlate with price. And so the last 2 years have been pretty challenging for adoption, both because of kind of the macro dynamics, but then also the regulatory dynamics in the US. And so to the extent there is an approval on a Bitcoin ETF, I think that is a big deal to essentially accelerate adoption into the industry. And then it's not just about Bitcoin. To the extent that occurs, we think it would broadly bring capital into other digital assets. And so more capital in the space drives more activity, drives more real world use cases, which is ultimately what I think this is all about for the industry. And so the price would likely follow the adoption curve, and an ETF, it's hard to deny that won't significantly impact adoption, particularly of Bitcoin first, but then other digital assets.
And in terms of companies that benefit here, we have to talk about Coinbase here. What is your base case for how this would impact them, given their involvement so broadly in some of these other spot ETFs?
Yeah, so they're financially involved with all but one of the current sponsors. And so there's obviously opportunity for revenues tied to the surveillance arrangements, but also transfer, custody, and other aspects of just being huge kind of on-ramp into the industry. That's kind of your obvious kind of first direct impact. The second derivative here is just, industry volumes have been incredibly low, not because people have been selling the assets or moving away from the space. Again, firms like BlackRock and Fidelity and Invesco and Franklin are moving to the space. So it's moving more mainstream, but there's these uncertainties that are impacting volumes of movement of Bitcoin or volumes of movement of other digital assets. And so if there is an approval, we think volumes in the industry would go up tremendously, which Coinbase would be probably the biggest beneficiary of any of the firms that we follow. And so there's kind of those obvious effects, and then there's kind of the second derivatives of just more capital and acceptance coming into digital assets, which spot ETF could play a big role in.
Devin, let's talk about another company that you follow or cover, Goldman Sachs. We see shares there down just slightly on the back of these continued struggles we've seen in their core trade and advisory business. But you've got a price target of $440 a share. What do you think is going to get that stock there?
Yeah, so it's very simple. I think you just need a little bit of stability in the capital markets. So if you peel back the onion on results today, they were actually okay. The core banking and trading results were better than several peers. We wrote a report on this a few weeks ago, but over the last 5 years since David Solomon has been CEO, they've gained more market share in their sales and trading and investment banking businesses than any of their peers, and 2x JP Morgan, which is kind of the second kind of most significant market share gainer. And so they're doing fine in the businesses that they're in. The capital markets have just been aberrationally challenged over the last 18 months. We do think inevitably that will change. There's significant upside to M&A volume, significant upside to equity and debt issuance, and trading. They're gaining share and driving strategic priorities like growing financing. So they're doing the right things. The market needs to settle down. And then this quarter and last quarter did include some idiosyncratic noise that are transitory, and we really don't think are going to be big headwinds going forward. So they're doing fine. Their ROE, in our opinion, return on equity, can get back into the low to mid-teens. And if it does, then that's kind of how we justify this pretty significant increase from here to get to our price target.
And we'll certainly be keeping an eye on that price movement. Appreciate you joining us this morning, Devin Ryan, Citizens JMP Securities Director of Financial Technology Research. Thank you so much.
Thanks so much. Great seeing you guys.